Las Vegas. A city of lights, dreams, and reinvention. But beyond the casinos, the nightlife, and the entertainment, there's another high-stakes game being played every single day: the housing market. And right now, as we move through 2025 and look ahead into 2026, the Las Vegas real estate scene is shifting in ways that every buyer, seller, and investor should pay close attention to. So, let's break it down in plain language, with no fluff, just the real story of where this market stands today and where it's heading next. Inventory rises, sales dip. September 2025 gave us one of the clearest signs yet that the market is cooling off. Active single-family listings climbed from around 7,600 to nearly 8,000. That's a 4% increase in just 1 month. At the same time, closed sales dropped, falling from just over 1,900 to about 1,800. That's not a dramatic collapse, but it shows that buyers are moving more cautiously. Maybe it's interest rates. Maybe it's uncertainty in the broader economy. Either way, the pace has slowed. Supply and balance. Now here's the key metric to watch: months of inventory. In September, supply climbed from 4 months to 4.4 months. That might sound small, but it's meaningful. Less than 3 months of inventory usually means sellers call the shots. More than 6 months gives buyers the upper hand. Right now, Las Vegas is sitting in that middle zone, a balanced market. Neither side has a huge advantage. That's a big change from the frenzy we saw in the post-pandemic boom, when homes were flying off the market. Prices holding strong. Despite the extra inventory and softer sales, prices in Las Vegas remain near record highs. Why? Because supply is still limited compared to demand, and there just isn't enough new construction to change that picture overnight. Plus, investors still hold a huge chunk of the housing stock, which helps keep values steady. So while activity is cooling, this isn't a crash. It's more like the market catching its breath. The investor factor. Speaking of investors, this is where things get interesting. Since the year 2000, investors have snapped up more than 130,000 homes in the Las Vegas Valley. That's about 23% of all home sales. At their peak in 2022, they bought over 4,000 homes in a single quarter. Hedge funds, institutional buyers, and cash investors may not be purchasing at that same aggressive pace today, but they still control a big share of the market. And because many of those homes are being held as long-term rentals, they aren't returning to the resale market anytime soon. That limited supply acts as a stabilizer, propping up prices even when demand slows. The casino connection. But real estate doesn't live in a bubble. What happens on the Strip can ripple through the housing market. Casino foot traffic has dropped, down 10% in July and 20% below pre-pandemic levels. For a city that thrives on tourism, that's no small detail. If the Strip slows down, jobs and wages take a hit, and that can trickle into housing demand. The good news? Local-focused casinos are doing better, and thousands of retirees who moved here from California bring stable, cash-back demand that doesn't depend on casino paychecks. Understanding months of inventory. Let's pause for a second and unpack months of inventory. Imagine 600 homes for sale in your neighborhood. If 200 sell each month, it would take 3 months to sell everything. That's 3 months of inventory. Less than 3 months? Sellers are in control. 6 months or more? Buyers get the leverage. Right now, with Las Vegas sitting around 4.4 months, we're entering buyer-friendly territory, but still far from an oversupply. The future of Las Vegas. Now let's look ahead. Las Vegas isn't standing still. By 2042, Clark County's population is expected to hit 3 million. That's a massive jump from the 2.4 million today. Combine that with new projects like the Brightline high-speed rail to California, major biotech and tech expansions in Henderson, and the growing sports scene with MLB and potentially the NBA. Las Vegas is positioning itself as more than just a tourist destination. It's becoming an economic powerhouse, which will directly fuel long-term housing demand. Wall Street's shadow. There's one concern worth watching though: Wall Street's role in residential real estate. Across the country, and especially here in Las Vegas, institutional investors have been turning single-family homes into rental portfolios. Reports suggest that within a few years, nearly 40% of rentals nationwide could be owned by these big players. That could squeeze out everyday buyers, push up rents, and reshape what homeownership means for families. For Las Vegas, this shift has already started. Entire neighborhoods are built and held specifically as rentals. That's a trend with big consequences. Why demand surged during the pandemic? To understand today's market, you also have to look back at why demand surged in 2021 through 2023. Low interest rates, remote work, and mass migration into Sunbelt states like Nevada pushed housing demand through the roof. On top of that, there was already a shortage of new homes being built after the 2008 crash. Add in eviction moratoriums and investor buying sprees, and it was the perfect storm. Prices soared. Even as rates rose later, many of those buyers and investors held onto their properties, which is why supply is still tight. Sports, culture, and growth. And don't overlook the lifestyle side of the story. Las Vegas is adding cultural anchors like a new art museum, expanding its skyline with new towers, and drawing major sports franchises. With the Super Bowl returning in the late 2020s, an MLB team on the way, and talk of NBA expansion, the city is building a profile that rivals major U.S. hubs. That kind of growth always feeds into real estate because people want to live where the action is. Closing thoughts. So where does all this leave us? In 2025, Las Vegas housing is cooling but holding strong. Inventory is up, sales are slightly down, and supply is moving toward balance. Prices remain resilient, supported by investors and long-term fundamentals. The risks casino slowdowns, Wall Street control of rentals, and economic shifts are real. But the opportunities from population growth to infrastructure to cultural expansion are just as powerful. If you're thinking about buying, selling, or investing, this market isn't about panic or hype. It's about strategy, timing, and understanding the unique forces shaping Las Vegas. Las Vegas has always been a city of big bets. And right now, the housing market is no exception. The next year will test buyers, sellers, and investors, but it will also open doors for those ready to play the long game. Stay tuned, stay informed, and remember, in real estate, the best moves are made with clarity, not with chance.